I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers podcast. And like we do every week, we address questions people have. One of the questions that's happening right now in this COVID environment, so a lot of our podcasts, we call them evergreen. They are basically they would be relevant for a long time. But this one's very time specific. This is the summer of 2020. It's actually July. And there's so much, we're all going through. So anyone who's actually watching this and COVID is still a part of the having an economic effect.
Yeah.
These rules. So we are talking today about the question of what happens if you have a mortgage and it is in forbearance.
Mm-hmm.
If you want to purchase a new home or refinance your existing mortgage, what do you have to do? And that's the question I have for Tom. He will be answering that.
Well, and it's interesting because we've had a couple of borrowers that have mentioned it up front. And fortunately, we've had these answers for. But other borrowers had not mentioned it up front. And we're getting towards the very end of them closing. And all of a sudden, we...
By the way...
Yeah, well, and we do a credit supplement. We update our credit report. We notice, hey, your mortgage balance went up more than just normal amount of interest. It almost went up like 2 or 3 payments. What happened? Oh, well, yeah, it's great, Tom. Our current lender actually gave us permission to go into forbearance. And it's like, oh, no.
Oh, no.
So totally legitimate, totally allowed. Their lender, blessed it, and they took advantage of it. Why not? The lender calls them up. I don't know actually who initiated the call, but the servicer may have reached out and said, "Hey, you're able to skip three payments." So in that case, sometimes we've been surprised. Other times we've been asked. So we thought, yeah, let's have this podcast and talk about that. So
yeah, they call us. They tell us, hopefully ahead of time, that they are in forbearance. What do they need to do in order to get financing? Because they can't get financing until certain requirements are made.
Right. Now, I would tell you this, that there's certain requirements for what we call the government loans for FHA, VA, USDA, and there's other requirements for conventional. We're just going to be talking about conventional because right now on the FHA and the VA, any government loan is going to be a lot stricter. So we're just going to focus in on the conventional loan right now. You will fall into 2 different buckets. The first bucket is going to be what we call the reinstated bucket. That is where you've gone through your 2 or 3 month forbearance period and it's over and you decide, you know what, that was great that we skipped those payments, but let's go ahead and get current now. So you call a servicer, you find out what you owe over those 3 months and you write a check and you get reinstated and your balance is brought, to a current reinstated position. Okay. If you are in that bucket, then you can proceed, no problem. There is a minor little asterisk that if you get reinstated after the loan application's taken, we might have to source those funds on where did you get that money get reinstated?
Right.
But as long as you do it prior to the application, then there shouldn't be any
so
sourcing.
If they call you on Monday and they're telling you this, they may pay it off on Wednesday. And as long as you basically take the application after Wednesday.
Yeah, exactly.
I mean, that's just probably too simple, but
right.
The funds would have to be received. The bank would have to confirm they are reinstated.
Correct. And so I have a borrower literally today, they got caught up this morning.
Okay.
So I told her, I said, we're going to do a couple different things. We're going to actually wait. I'm going to run a couple different scenarios for them. And they're going to be leaving town. So next week we're going to end up pulling credit. And by then we hope that the mortgage would have reported to the bureaus that the payment was made and that everything's caught up. But if it's not, we'll simply have to do some type of supplement to confirm that it was paid, when it was paid, et cetera. So yeah, we're not going to cut it so close to where we're off by 24 hours. We'll probably give a couple day.
Okay.
Okay. The other bucket is that you simply took the forbearance because you were in some hardship. And if you don't have money to pay for it the first month or the second month, then why would you have money enough to pay for it at the end? So you simply are not able to reinstate, and you simply go to your servicer and you select one of the repayment plans. And this is what, Ed, you and I, we don't have a great, because it's so new, I don't have a nice menu of all the different options your servicer will give you,
Hmm.
but they will give you certain plans. The lender ends up getting interest on it, but whether they push it towards the end or you make higher monthly payments in the middle, that I don't have a good example for right now. But there are going to be repayment plans that you can sign up for. Does that make sense?
Yeah, I think every lender, like every servicer, is going to have a different menu for sure.
Okay.
Different options. Some will be really complex. Some will be very simple.
Yeah. So assuming that you agree to the repayment plan, and again, this is in the event that you want to refinance soon, and you are just in the middle of a forbearance or coming out of it.
Yep.
What we're being told and what we're hearing on the street is that there's actually a trial period that they want borrowers to go through, which is you ask for a forbearance for a reason, likely, and the repayment plan that you agree to, we want to make sure that you're successful in making that new repayment plan. Okay. So the trial period is going to be over a month or two, is what we're hearing. And as long as you can successfully make that payment, because it's likely going to be higher, right? Why would it be? Why would it be lower? There's, you may be, pushing a balance owed, towards the end of the loan, but you're still going to be paying interest on that amount of balance that you let accrue during the forbearance period. So they
Hmm.
want to make sure that you are able to make that payment successfully. Once you're able to complete that successful trial period, then you need to make 3 on-time mortgage payments. And once you do, and you're able to satisfy the 3 on-time mortgage payments after, then you are able to go into a refinance.
Okay, so if they do the repayment plan to get out of this forbearance, they have a trial period of it's 2
We're,
payments.
we're, we're hearing, one or two payments is what
Hmm.
we're hearing right
And
now.
so it's 2 payments in trial period plus 3 payments
Plus 3.
afterwards.
Yeah.
So that's 5 months.
So it's 5 months. So at first when we were, doing some discovery on this, it sounded like
Hmm.
it was just three on-time payments. Now,
Yeah.
one of the questions was, and it was towards the end of the month, I said, is it 90 days? Or is it going to be in the case here, 45 days? Because if it was the end of June, could we make June's payment, a couple of days before the end of June, make July's payment the next month, and then make August's payment, 30 days later?
Yeah.
And one of the lenders said, yes, that would be considered 3 months of on-time payments, but it happened to be over like a 45-day period. So hopefully that makes sense does
Wow.
that make sense to you at least?
Yeah. Okay, so that sounds complicated. I mean, that sounds like it's going to take a long time. If people are in repayment,
Mm-hmm.
going through the repayment thing is going to be, I think, a challenge for a lot of people. They're going to have to be patient. They're going to have to go through. It's going to take months.
Yeah. Yeah.
If you have the ability to do the lump sum
Mm-hmm.
to get reinstated, it is so worth it to just get that thing over with.
Right. Right. But if you're not able to,
Right.
a general rule right now is, we're recommending that you wait 6 months.
Yeah.
So from the time that you actually start making your mortgage payment, again, you wait 6 months. That should satisfy that trial period plus those 3 on-time payments.
Okay, so everyone, we do this every week. If you have questions, be sure to let Tom or I know. If this forbearance issue is affecting you and you have repayments or you have questions about purchasing, refinancing, you're in the middle of a forbearance, be sure to reach out to us. We'll be happy to help. Like us on Facebook, subscribe on YouTube, comment. We'll get back to you.
Awesome.
All right, everyone, have a great week.
All right. Thanks, folks. Take care.
Bye. Hey guys, thanks for listening to the Mortgage Brothers Show. Please let us know if you have any questions you'd like us to answer on this podcast. You can email your questions to tom@azmortgagebrothers.com or yours truly at eddie@azmortgagebrothers.com. And be sure to ask us for a free quote on your next mortgage. Tom and I will personally work with you and help you through the whole process. Signature Home Loans, LLC does not provide tax, legal, or accounting advice. This material has been prepared for informational purposes only. You should consult your own tax, legal, and accounting advisors before engaging in any transaction. Signature Home Loans, NMLS 1007154, NMLS number 210917 and 1618695, Equal Housing Lender.